When it comes to investing, the Investment IQ Insights team believes in sticking to what we understand. And few things are more straightforward than the housing market. People need homes, it's that simple. Now, while we don't like getting caught up in the day-to-day fluctuations of the stock market, there are times when well-established companies in essential industries, like home building, present attractive opportunities for the long-term investor. Remember, we're looking for companies with a history of solid earnings, strong management, and a durable competitive advantage. These 5 home builders we're about to delve into fit the bill. They're all leaders in their field, boasting a track record of delivering quality homes to a wide range of customers. Now, we're not promising you'll get rich quick with these stocks. That's not how we invest, and it shouldn't be how you invest either. But if you're looking for solid, well-managed companies with the potential for steady growth over the long haul, then stick around. These 5 home builders are worth a closer look. First up, we have D.R. Horton, the largest home builder in the United States by volume. Based in Arlington, Texas, D.R. Horton has a market cap of around $46.4 billion. Trading at roughly $140 per share, D.R. Horton offers a compelling opportunity for value investors. With a forward P/E ratio hovering around 9, the market seems to be undervaluing D.R. Horton's potential. Let's delve a little deeper into the financials. The company boasts a healthy return on equity exceeding 20%, indicating efficient use of shareholder capital. Furthermore, their debt-to-equity ratio sits at a manageable 0.25, reflecting a prudent approach to financial leverage. A current ratio of almost 7 signifies ample liquidity to meet short-term obligations. D.R. Horton consistently delivers impressive operating margins, typically exceeding 15%, a testament to their operational efficiency. And if you look at their earnings per share growth over the past 5 years, you'll find a consistent upward trajectory, a clear sign of a company firing on all cylinders. Remember, past performance is not a guarantee of future results, but it does paint a compelling picture. D.R. Horton's consistent growth, strong financials, and leading market position make it an attractive prospect for any long-term investor seeking exposure to the robust housing market. Next on our list is M/I Homes, Inc., a company that truly understands the value of building not just homes, but also shareholder value. Headquartered in Columbus, Ohio, the company has a market cap of approximately $3 billion and trades around $122 per share. With a forward P/E ratio in the ballpark of 7, the company appears to be undervalued by the market, presenting a potential opportunity for discerning investors. Examining their financials, we see a return on equity consistently exceeding 15%, indicating a management team adept at creating value for its shareholders. The company maintains a healthy debt-to-equity ratio of around 0.60, reflecting a balanced approach to financing its operations. M/I Homes' current ratio, typically above 1.2, demonstrates a strong liquidity position, providing a cushion for any short-term economic headwinds. Their operating margins consistently hover above 10%, showcasing their commitment to running a lean and efficient operation. And when we look at their earnings per share growth over the past 5 years, we see a consistent upward trend, indicating that M/I Homes' commitment to operational excellence translates into tangible results for its investors. M/I Homes' consistent performance, combined with its attractive valuation, makes it a compelling option for investors seeking exposure to the resilient housing market. Now, let's turn our attention to Lennar Corporation, one of the most recognized names in the home building industry. Headquartered in Miami, Florida, Lennar boasts a market cap of roughly $42 billion. Trading at approximately $150 per share, Lennar, with a forward P/E ratio hovering around 9.3, presents a compelling investment case for those seeking long-term value. Delving into the financials, we see a company with a history of strong profitability. Lennar consistently delivers a return on equity above 18%, indicating the management's effectiveness in utilizing shareholder capital. Their debt-to-equity ratio, currently a super low 0.14, has improved quite significantly over the last 12 months. Lennar maintains a healthy current ratio, exceeding 4.0, ensuring they have ample liquidity to navigate short-term market fluctuations. Their operating margins consistently surpass 15%, highlighting their ability to control costs and maintain profitability. Examining their earnings per share growth over the past 5 years, we see a steady upward trajectory, a clear indication of Lennar's ability to grow its bottom line consistently. Lennar's consistent performance, robust financials, and strong brand recognition make it a compelling investment opportunity for those seeking exposure to the ever-growing housing market. Moving on, we have PulteGroup, a leading home builder with a strong presence in some of the nation's most desirable markets. Based in Atlanta, Georgia, PulteGroup has a market cap of approximately $23 billion. Trading at around $110 per share, PulteGroup, with a forward PE ratio of around 8, appears to be undervalued by the market, making it an intriguing prospect for value-oriented investors. A closer look at their financials reveals a company committed to creating shareholder value. PulteGroup consistently generates a return on equity exceeding 20%, showcasing their efficient use of capital. Their debt-to-equity ratio, hovering around 0.24, reflects a balanced approach to financial leverage. PulteGroup maintains a healthy current ratio of 4.12, ensuring they have sufficient liquidity to meet short-term obligations. Their operating margins, consistently above 21%, demonstrate their commitment to running a lean and profitable operation. Looking at their earnings per share growth over the past 5 years, we see a steady upward trend, indicating that PulteGroup's operational efficiency translates into tangible results for its investors. Given its attractive valuation and consistent performance, PulteGroup presents a compelling opportunity for investors seeking exposure to the robust housing market. Last, but certainly not least, we have Toll Brothers, a company synonymous with luxury home building. Headquartered in Fort Washington, Pennsylvania, Toll Brothers boasts a market cap of around $12 billion. Trading at approximately $115 per share, Toll Brothers, with a forward PE ratio of around 8, appears to be significantly undervalued by the market, making it a potentially lucrative investment for those with a long-term perspective. Examining their financials, we see a company with a history of strong profitability. Toll Brothers consistently delivers a return on equity exceeding 15%, reflecting their ability to generate substantial returns for their shareholders. Their debt-to-equity ratio, hovering around 0.40, indicates a prudent approach to financial leverage. Toll Brothers maintains a healthy current ratio, typically above 3.5, ensuring they have sufficient liquidity to navigate short-term market fluctuations. Their operating margins, consistently above 19%, demonstrate their commitment to running an efficient and profitable operation, even in the luxury segment. When we look at their earnings per share growth over the past 5 years, we see a steady upward trajectory, highlighting Toll Brothers' ability to consistently grow its bottom line. This combination of consistent performance, strong financials, and a dominant position in the luxury market makes Toll Brothers an attractive prospect for investors seeking exposure to the resilient housing market. Remember, investing is a marathon, not a sprint. These 5 home builders represent just a starting point for your research. It's crucial to conduct your due diligence, consider your risk tolerance, and consult with a financial advisor before making any investment decisions. The housing market, like any other, has its cycles. But people will always need homes, and these 5 companies are well positioned to capitalize on the long-term demand for quality housing. Remember, we're not advocating for any particular stock, and past performance is not indicative of future results. But by focusing on companies with a history of strong management, solid earnings, and a durable competitive advantage, you increase your chances of achieving your long-term investment goals.